Scotia Online for Business, you can safely and quickly conduct your transactions and save on costs. Accept payments, transfer funds including third-party and wire transfers, view balances and download statements, pay bills and credit cards, make supplier payments, manage payroll, and purchase foreign exchange. Let us handle the way your business does business. Speak with a Scotia representative today. Call 888-429-5087 or email bnsj.businessbanking@scotiabank.com.
Hi everyone, good afternoon and welcome. Thank you for joining us this afternoon. I am Sarah Cumming, VP of Capital Markets at Scotia, and I will be your host for today's webinar on assessing the post-COVID-19 landscape, the road to recovery. Joining us today are our guest speakers, Jeffery Hall and Dr. Adrian Stokes. Jeffery is the CEO and Director of Jamaica Producers Group. He is the Chairman of Kingston Wharves Limited and Scotia Group Jamaica Limited, and is a member of the Board of Directors of several companies including Blue Power Group, National Housing Trust. He has served as Director of the Jamaica Stock Exchange and the Bank of Jamaica, and currently serves as the Economic Policy Council Chair at the PSOJ. Dr. Adrian Stokes is Senior Vice President, Head of Insurance and Wealth Management, and is responsible for the growth and profitability of both Scotia Jamaica Life Insurance Company and Scotia Investments Jamaica Limited. Adrian has a successful background in investment management, product development, corporate strategy, and risk management, and is a member of the Board of Directors for DBJ. Gentlemen, thank you for joining us. Before we start, I'd like to run through a few housekeeping items and explain how today will flow. We'll start with a 15-minute presentation from Adrian on the macroeconomic impact of the virus on our local economy and outline initiatives and actions taken by our government and central bank to manage the effects of the virus. Next, we will move to have a conversation on what this means for businesses and how business leaders are beginning to navigate for what's next and adapt for greater resilience. At the end of the conversation, we would love to hear and answer your questions. To ask questions, please raise your hand or type it into the chat box and your mics would be unmuted. Adrian, without further ado, I will hand over to you to give us our presentation.
Thank you, Sarah. Good evening, everyone. And let me start off by thanking Sarah and Simone and the team for pulling this very important event together. And let me also thank Jeffery for agreeing to join us today. Sure. Thank you. Thanks. Good to have you, Jeffery. This forum is very timely given the significant economic uncertainty occasioned by the spread of the virus. Today, I will start off my presentation by reviewing a quick review of the U.S. economy, since so much of Jamaica's economic fortune depends on what happens in the U.S. I will then move on to examine the local situation, in particular, how the local variables are responding to the government response to the COVID impact. I will also briefly examine the situation on the balance of payment. So let's start off with the jobless situation or the job situation in the US. So up to February of this year, what we saw was record growth in the US and significant low unemployment, right? At the onset of COVID, what we saw was a significant decline in employment levels. In fact, in May, the US economy lost about 20 million jobs, quite significant. And we also saw a significant increase in unemployment claims. Total claims peaked at around 41 million during May. And importantly, and as you can see from the graph there, it has been on a decline since. Want to look on a very important indicator of what's happening in the market, and that is the US Treasury yields. And in particular, to examine the very important US 10-year Treasury bond. What we saw at the onset of the crisis was a significant flight to quality. Investors fled risky assets, for example, like equities, and moved into US Treasuries. And this resulted in a significant decline in yields on US Treasury bonds. So much so that yields fell to a record 50 basis points, very low. What we have seen since, certainly going into May and the first part of June, is a recovery in yields. Yields have risen to about 70 basis points as investors are becoming more confident that the recovery in the US will be sooner than initially thought. If you look at a different measure of what's happening in the US economy, if you look to the stock market, so what we are seeing is, or what we saw in the S&P 500 was a significant downward fall, right, as investors sold risky assets. Since then, however, we have seen a significant recovery in the S&P 500, so much so that the market is on track to recover all of its losses since the start of the year. Now, that's significant. If you look at the VIX, which is a measure of volatility, the VIX spiked initially, and it also has been on a downward trajectory since. Again, two other measures that indicate that investors are becoming a little bit more confident about the economic trajectory of the US. So it's important for me at this juncture just to summarize the key themes coming out of the US. One, we saw a significant decline in economic activity as investors reacted to the onset of COVID. Since then, we have seen a significant recovery, certainly in the equity market, and to some extent recovery in bond yields, reflecting that investors believe the future certainly will be better than what they thought in the early part of this year. Looking at the local situation, the impact of COVID has been significant. So far, the government told the public that there is a fallout or expected fallout of about $80 billion in tax revenues for the current year, fiscal year 2021. In response, the government has decided to cut expenditure by about $30 billion. Net, what the government is forecasting for fiscal year 2021 is a reduction in the primary surplus to 3.5%, coming from a target that was programmed pre-COVID at 5.4%. The fiscal deficit is also estimated at 2.9%. Before COVID, it was estimated at 0.4%. So just to look at some key forecasts arising from the fallout in the fiscal situation. The key variable to look at there is the debt to GDP number. The debt to GDP at the end of 2021 is now estimated at around 97.5%, let's say 98%. Pre-COVID, this variable was estimated at 84%, so quite a significant deterioration in the outlook for the debt variable. Again, this highlights a very important vulnerability that the country has, and that is its debt profile, notwithstanding the significant effort that was made in years gone to arrest the situation. The nature and scale of the COVID impact has really dealt us a blow. And one of the first signs of that blow is a material revision in the debt to GDP number. So the government, as I indicated, responded to the crisis by adjusting its expenditure so that it could still produce a decent primary surplus number, a decent fiscal number without adding to the overall contraction or the expected contraction in the economy. So how have market variables responded to what we're seeing in the economy? A key metric to look at is short-term interest rates, in particular the 30-day BOJ CD rate. And as you can see there, that has been on a downward trajectory. So the fiscal stance you would expect, or in response to the fiscal stance, the market is fairly accommodating or believes that what the government is doing is the right thing, right? Because we're seeing interest rates which is indicative of investor sentiment trending down. The other thing that supports lower rates in the market is an accommodative monetary stance by the central bank. Central bank has been very aggressive with monetary policy and providing Jamaican dollar liquidity in particular to the market. And those actions have supported interest rates either being at historical lows and with a slight, or say with a risk that those rates could even go further. If we look at a further measure of local rates in the market, looking at the longer term bonds, GOJ, J-dollar bonds, what we're seeing as well is that if you compare where we are now relative to a year ago, you will see that generally rates are below where they were last year. Again, a significant show of confidence in the government's response and what the central bank is doing. And so you're seeing a well-behaved local treasury bond curve. If you look at inflation, right? Inflation is well-behaved, right? You would expect that given the disinflationary pressures coming from low oil prices, significant reduction in domestic demand. Those factors, confluence of factors, are, they are creating an environment of low inflation. And in fact, we expect inflation will stay within the BOJ's range of 4 to 6% for the medium term. So again, what's the concern? So if we, again, just take a quick check of where we are in the presentation and review quickly the international scene, and then let's review quickly the local situation that we have covered so far. So we have seen renewed optimism in the US economy. We have seen that in bond yields. We have seen that in the market. As I indicated before, S&P 500 has pretty much regained a lot of the lost ground that we saw in the early part of the year. On the local side, we have seen where the government has responded to the significant fallout in the fiscal, especially on the revenue side. It has cut expenditure, and primary surplus of 3.5% is what the government is projecting. In response, we have seen where local macro variables, for the most part, have been well behaved. So this is a fairly rosy story so far. So what COVID? What's the problem? The immediate concern, certainly from a local perspective, is on the external side of the equation, i.e. the current account. The fallout in tourism is significant. Tourism brings in in excess of $3 billion US to the balance of payment on an annual basis. And with that going away, almost a 100% closure, that has dealt the balance of payment a significant blow. Remittances as well are expected to slow for the year. We can have a debate in terms of how significant that reduction will be. especially if the US economy recovers earlier than we expect. But the truth is that we expect on a full year basis remittances to be below last year's outturn. So our two major FX earners are currently under pressure. And from the work that we have done, we believe that the funding gap on the BOP is in the order of about 1.4 billion USD. The government estimates that from the government perspective, the funding gap is about $1.2 billion. In terms of the sources to fund this gap, the government has engaged with the IMF. It has received 520 million USD under the IMF's Rapid Finance Program. Government also has access to another, I would say, 300 million USD in liquidity from the other multilaterals, the Caribbean Development Bank, the IADB, and other multilaterals. So when you take these sources and you compute it or you compare it against the gap of about $1.2 to $1.4 billion, you see that there is still a funding gap on the balance of payment. So how will the government respond given this funding gap? So in principle, it will, certainly one of the measures that it can adopt is to have the reserves provide a buffer or use the reserves as a funding source and or allow some adjustments or some depreciation in the Jamaican dollar as an overall measure to manage the shock on the balance of payment. So if you move to the next slide, just an important point that I want to make here. So again, recall the point that I just made. There is a funding gap on the balance of payment, right? 1.2 to 1.4 billion is the gross gap, we believe, somewhere in that region. Government has identified funding sources of approximately $850 million, which means roughly we have a gap between $300 to $400 million still remain. Gap, we believe, the funding of that gap will come from the reserve, so we expect the reserves to fall going into the end of the fiscal year. And we also expect for there to be some depreciation in the currency. But when you look at what's happening in the market, you're seeing where the year-to-date depreciation of the currency is just 2%, right? Not anything to write home about. And one would ask the question, if you have such a significant fallout in the balance of payment and there still is a funding gap, one would expect the currency to adjust by more to correct that imbalance. In fact, by our estimation, the real exchange rate, and just a quick definition of what we mean by the real exchange rate in terms of a working definition is a nominal rate adjusted for relative price levels between Jamaica and the United States. Gives a sense of overall competitiveness of Jamaica relative to the US. So we believe the exchange rate, the real exchange rate, actually what matters, is overvalued. And it has become overvalued because we have seen some nominal appreciation in the Jamaican dollar starting late May and going into June, right? So we have a problem, or we have somewhat of a conundrum. BOP gap and a currency that has only depreciated 2%, and in fact, a currency where the real exchange rate is appreciating. So we believe, therefore, that the trajectory for the currency is depreciation. We believe that the government has adopted measures that are prudent, and those measures, we believe, will rule out disruptive movement in the currency. But as a reasonable person, you should not expect to see the kind of exchange rate movement that you're seeing or you have seen so far in June. So I want to end my presentation by summarizing some key points, some key themes. Again, just want to relook at the global situation, in particular the US market. Renewed optimism in the US. One of the signs of that optimism is a significant recovery that we have seen in the S&P. My view, I believe the market is getting ahead of itself. I believe the US economy, or recovery in the US economy, will be far more prolonged, right, than what the market is expecting. I don't believe the recovery will be as sudden and as sharp as what the equity market is projecting. The local response to the crisis, so far so good, I would say. The market local variables have responded well. Notwithstanding, we think there is still an important gap on the balance of payment that will be dealt with over time by a reduction in the reserves and some depreciation in the currency. Overall, the economic trajectory for Jamaica clearly is going to be shrouded with uncertainty. It clearly will be depend on the nature of the virus, specifically how widely it spreads, or said differently, how well we contain the spread. The key, however, is to recognize that the risk to the economic outlook is skewed to the downside. That ends my formal presentation. Sarah, I'll hand over to you.
Great. Thank you, Adrian. Thank you for that. Very important themes. You highlighted that we are seeing recovery in some of the macroeconomic indicators, but caution these indicators. It's clear that the coronavirus is not only a health crisis of immense proportion, it's also an imminent restructuring of the global economic order. Jeffrey, how are business leaders beginning to navigate for what's next?
Well, the businesses that I'm associated with, Sarah, by and large have organized their thinking about the coronavirus into 3 or 4 phases of response. And for many of the businesses I'm actively engaged with as an executive, we use a 4-phase framework, and we give them catchy names. So the first phase is avoid, and that deals with, and I'll rate how we're doing as a group of businesses in Jamaica in relation to each phase, so your listeners have a perspective from me on it. But the first phase is avoid, and in that phase, you're dealing with making sure that your staff, your customers are not infected by COVID. The second phase we call adapt, and that phase is during the period of operating within the great lockdown, okay? So we know what that looks like. We're past those 2 phases, or we're pretty far along, because as we know, the borders open on Monday. And so the next 2 phases, we call them in the business in which I'm involved actively, the restore phase, which is a phase in which we're operating outside of a lockdown, but in a period of a prolonged economic downturn. So it's a different world, and I'll share what that world looks like in a second. And then the final phase we call reinvent, which is a post-COVID new normal. So from the perspective of the businesses that I'm associated with, from the avoid phase, I think Jamaica has done exceptionally well. So the headline measure of our success is the deaths, and it's a kind of a morbid topic, but death per million. So Jamaica is running around 3 or 4. The Dominican Republic, where I do some business, is running at around 51. The US, the Netherlands are around 350, and then the UK is around 600. So I think Jamaican businesses can feel relatively good about phase 1. We have to move on. Phase 2, let's call it the adapt. So how are we doing with the economic downturn? A couple of things to look for. Number 1 is compassion. So how do we respond to those of us who don't have a job? And I would say, if we say as a country or as a private sector, we did an A on the first one, I would say we're at A minus, B plus on the second one. So we had the CARE program, which was about $16 billion for folks who were affected by the lockdown period. We had people doing e-banking to a greater extent, something that Scotia obviously knows a lot about. E-gov to some extent ramped up. E-commerce to some extent ramped up. And that was in the lockdown period. Essential services found a way to do business to some extent. And I think we did reasonably well. We can talk more about that later. The next two phases were yet to grade. And we need to try to understand what do we need to look out for to assess how well are we going to do. In the restore phase, whereas compassion was kind of the macro perspective, collaboration is going to be a big one, and global collaboration in particular. Because in our case, we're an open economy, and so we have to figure out how we're going to trade in this environment from a tourism perspective. But the core issue that we face in the restore phase is the depth of the economic downturn. Now, the IMF is using a number of 5.3% negative GDP growth in this term. And just to give everybody some perspective on that, FinSAC in 1998 was minus 2.3%. We have never experienced 5.3% downturn annual GDP since the 1970s, which you probably don't remember, but was a very significant disruptive era in Jamaican life. So what do we need to look for? As a business community, we're going to assess our performance on, to some extent, M&A, in which people look for synergies to reduce their core overhead base and stay alive. Something that Adrian mentioned we're going to have to address, which is FX availability. How good are we as businesses in treasury management in an environment in which there's exchange rate volatility and exchange rate unavailability, because we have this $1.2, $1.3 billion FX gap. The third thing is financing. The degree to which, if you look at Jamaica's private debt to GDP, Adrian spoke about the public debt to GDP. Our private debt to GDP is about 38%. So Trinidad is at 40, Costa Rica is about 60, Panama is about 80, the US is about 190. So from a private sector debt to GDP, we do have headroom. And so we have to make sure we deploy that headroom. Credit bureaus have to function well. We have to ensure that capital markets function well. And we can talk a lot about that, understanding where we are in that space. I think there's a role for, obviously, Adrian mentioned that the government finances are constrained, and the government has announced that it doesn't wish to dramatically increase the debt to GDP ratio from the government's perspective. So the solution there is going to be how we do public-private partnerships, whether we see privatizations happening, because when we look at our overall growth number, growth is, consumption, investment, net exports, and government spending. And obviously, we're not going to increase the government spending piece dramatically. Consumption is constrained, so the investment piece matters. So we need to make sure that a wave of investment is possible for us. Looking to the reinvent phase, and I'll shut up in a second, kind of 3 or 4 very big themes we can talk about. One is this fight that the US and China are having, and how does that play out globally. It's very significant. It affects commodity prices. It affects a wide range of issues. We need to look at kind of energy cost long term. I think the perspective is that outside, so obviously energy prices have fallen, but outside of COVID, there are some big dynamics at play that make energy less determinative of our potential. So energy becomes more neutral, and so we can do more. Work from home is huge. I think we can talk about that. If you look at our BPO sector, at around 35 to 40,000 people, with India at, say, 4 million people and Philippines at 1.2 million people, if we get 1% more of the work from home business, we have a very significant base of potential employment. And what's happened, Sarah, is when you look at these money center locations, New York, London, Toronto, et cetera, they would have had an office tower full of people working pre-COVID, and now all of those people are working from home. And so we think there's a role for Jamaica, a very significant role for Jamaica in that space. So, quick and dirty answer. We need to look at, we think we've done very well on avoid. We've done reasonably well on adapt during the lockdown period, and I've shared things that I think we should look out for in the prolonged downturn, which is very significant, and then where I see future potential. So.
No, thank you, Jeffrey. You talk about yes, the prolonged downturn and the need to reinvent and look for opportunities, whether that be, you mentioned, for investment, partnerships, joint ventures. Adrian, it is a difficult time for businesses in terms of how businesses can ready themselves to thrive when these conditions improve. Can you tell me or give me a sense of how Scotia has been helping clients navigate this uncertain time and thrive for when conditions improve?
All right, thank you, Sarah. So our team has been very proactive with reaching out to customers and working with them through this very difficult period. Our corporate bankers, for example, I know have been involved with many of our customers to have customized solutions, bespoke solutions for these customers. So these solutions are designed to meet the specific needs of your business, and that has worked well, right? Same thing on the retail side. Our retail customers have had options to defer payments. In insurance business, for example, we have extended a period for which you can pay your premiums without putting your policy at risk. We have waived fees, withdrawal fees, for example. We know this is a time where persons will need additional cash. And so, we have taken a decision to waive fees on these types of transactions. In the investment business, information is very, very important in that space. Customers in that space value information to enable them to first of all, understand the environment, and then to make informed investment decisions. And so we have had a number of fora like this, actually, where the team has put together a proper assessment, not just of the local environment, but also of the global landscape, and have gone into in-depth analyses of the various asset classes, have given detailed assessment of the evolution of these asset classes, and therefore provided our customers with solid information to make informed decisions. So we are very, very happy with the work that we have done during this period to support our customers and to ensure that they can get to the other side of this pandemic.
Jeffrey, you mentioned, greater collaboration, efficiency. You mentioned things around the private debt to GDP and us having headroom. What would you like to see, from the markets, whether financial institutions themselves or capital markets, in supporting greater efficiency in that space, keeping the access to credit available, given what you mentioned, where maybe government spending would be constrained, so to keep the growth or to counteract what we're seeing on the growth side, keeping investment at a level that keeps us going? What would you like to see banks, the market, doing more of?
Well, I think we're going to have to do a couple of things. One is I think we're going to have to be very determined to see investment take place in the areas in which we have relative competitive advantage.
Okay.
And I think that's going to require us to And I think that's going to be, to some extent, in the services sector. And I think the services sector will include, looking medium-term, tourism and BPO in terms of significant employers, as well as logistics. And I think we're going to have to make sure that we tide those sectors over. And so we're going to have to identify products and structure risk in order to tide those sectors over. I'm optimistic that we can do that. As I said, I think we're not over-leveraged as a society. Now, from and I don't want to get to make this just about finance, but because I think there's a lot of responsibility at the level of business owners and business operators in the micro economic space. But I do also think that there's a huge opportunity to do a better job in providing small retail credit to relatively unbanked communities. So the cost of finance for some of these components of our overall society is high. So obviously we want to, there's a discussion around NIDS, there's a discussion around electronic payment systems, there's a discussion around digital banking, around e-commerce, and a whole range of more inclusive products in which people can get financing and get exposure to credit and expose their own credit histories. So I think those two things will help in the financial space.
Okay. I just want to touch on what you talked about, the reinvent phase. What we find is most industries are having to reactivate their entire supply chain. Can you give us your perspective on how the supply chains in our local market have been disrupted and how you think they will evolve?
Okay, so there are a couple of things that are happening all at once. The first thing, obviously, is the removal of the reliance, to some extent, of the tourism sector. So from a share of GDP, the direct tourism business is around about 10.5%. But the indirect tourism business, and these are IDB numbers from their economists, are on the order of 30-ish%. And then from an employment perspective, around 9.5% direct and around 30% indirect. So for players in the economy, that's had its impact. And then there's been a need to redirect those volumes somewhere else. And so that's been a big issue. A second issue has been availability of supply globally. That, I don't think, has been the biggest issue. But obviously, there's some choke points in PPE as tourism opens up. There were some choke points early on in the year in China trade when they were at the epicenter of the outbreak. And then there are a few other choke points in various hotspots. And the hotspots are moving around with right now Mexico and Brazil emerging as very significant. And obviously Europe would have been significant in between. So that has a role to play. My own view is that the thing that's going to be quite interesting over the next few quarters will be the FX situation. Okay. And the degree to which we have smart responses to an obvious shortfall in FX. Now, some of that is going to be a financial solution, and there's going to be a role for financial intermediaries to help people to solve that. But some of that's going to be about how we replace the import component of what we do and how we add FX to that which we do. From the perspective of just raw transport, the ports, the airports, the haulage systems, et cetera, I think those will perform okay and shouldn't be a major issue. Obviously, we'll benefit a little bit from lower energy costs through the chain, and a little bit from lower commodity prices
Okay.
once the economics set in. Because Jamaica is not a big commodity exporter, so we're a beneficiary of some of that.
Okay, thank you. Well, we're just at about 20 minutes, and I do want to allow for some Q&A. We do have some questions coming in. Participants, I do invite you now to either write your questions in, put your hands up if you'd like to speak through the mic. And I'll actually start with this question to Adrian, given that Jeffrey just touched on the exchange rate and the FX issue. The question is in relation to the point he made in his presentation, and it is, if the real exchange rate was allowed to float to market forces, what could be the potential impact on net exports?
Great point. So what I would say, again, just for the benefit of our listeners, represents what we mean by the real exchange rate and why it's important to have a real exchange rate that is not overvalued. So the real exchange rate, in a nutshell, measures competitiveness between two countries. In this instance, where I was focused on the Jamaican economy and also the U.S. economy. In terms of its impact on net exports, now what we see, and if you look at the BPO sector, for example, right? If you have, and let me give you an example of what we mean by competitiveness from an economic perspective. If you have a prospective investor in the BPO space looking to put a plant in Jamaica relative to some other destination, let's say India, one of the factors that will go into that decision is labor cost, right? When the local currency starts to appreciate, then the cost to that investor reflected in US dollar goes up. If nothing else happens to the other destination, it means that Jamaica's BPO potential isn't as significant an opportunity as in another market, right? Of course, we're assuming that those factors, those costs are not rising at a relative rate or a similar pace as in the Jamaican situation. So that is a very good example, looking at labor cost, right? As one obvious example of what happens when the real exchange rate starts to appreciate. If you're an investor looking to come into the market to hire local labor, then your costs in terms of US dollars will go up, and therefore your investment doesn't seem as attractive. So having a real exchange rate that's not properly managed could actually stunt the rate of growth of employment in the local economy. One of the reasons I would put out there that we have seen a rapid growth in job creation in the Jamaican economy over the last 3 to 4 years is because we have had a real exchange rate that has been fairly valued, right? And again, I can't overemphasize how important it is to ensure that that variable is well managed. The exchange rate has always been a very emotive topic in Jamaica, always been, right? As a little boy, I grew up hearing about the exchange rate, politicians, talking about the exchange rate. Everyone has a view, right? The reality, however, is that we need a rate, a nominal rate, that balances the overall macroeconomy. I believe sometimes too much emphasis is placed on the demand side of the equation. In other words, persons looking to buy, and the nominal rate goes up, and so there's a big discussion and a scream, right? While very little discussion or emphasis is placed on the other side of the equation. So to Marian's question, the short answer is an exchange rate that is not our real exchange rate that is not allowed to attain competitiveness will reduce your net export.
Thank you. Our next question, I will refer to Jeffrey for the first half of it, coming from one of our participants, Texroy Grant. What are the major paradigm shifts that you see taking place in the Jamaican economy in a post-COVID-19 world?
Yeah, great question. My short list would be number one, let's call it BPO, work from home, work from far away. You know, going into the crisis, the US had 3.7% unemployment and a kind of an effective minimum wage, you know, for real jobs, if I can be a bit loose, of about $15 an hour. So obviously we're competitive, and we offered something, and they seem to have a little bit of a bias towards inbound immigration. And so this realization that we can do a lot of things outside of an office is a big one. I think if energy costs come down, that's been an issue for us. Adrian mentioned a competitive exchange rate. I think there are parts of the manufacturing process that can happen here. I think that's going to be very useful, particularly in a world in which people are looking very hard at how they diversify their sourcing base.
Okay.
So people would have been comfortable having a very significant part of their sourcing base in a single jurisdiction, such as China, and they will want to see that be multi-locational. And there's to some extent, the U.S. is picking friends, and so to some extent are other players, including China, and I think we can be friendly to everybody. So I think those are two big ones that I would leave with you for now. Another one, just leaving it with you, is digital transformation broadly. There's an acceptance of e-commerce, e-gov, e-banking, and I think players who are first in those will have some significant opportunity as well.
Okay, great. Adrian, do you want to give us your view and your take on where you see the opportunities locally post-COVID?
So I just want to endorse a lot of what Jeffrey said just now. All of those things are relevant. The one other issue that certainly as someone that has responsibility for an investment business and work within a financial group is certainly having a greater appreciation of what we call black swan events. These are low probability events, but when they occur, they can be absolutely catastrophic. We saw what happened in 2008, and now we're seeing the COVID impact in 2020. And these black swan events, low probability of occurrence, but significant pain when they occur, can wipe businesses out. And therefore, you have to ensure that you have a strategy that captures as much as possible the risk inherent in your business. And also importantly, ensure that you have access to liquidity. It's very important. Liquidity is the lifeblood of any business. Ensure that you have it or have good access to it. Without a good liquidity management system, usually what happens is that even good companies will become insolvent. So the problem will start off as a liquidity problem, right? If you can't manage it, then it quickly degenerates into a solvency problem. So even during the good times, and this is a lesson, this is a punchline, even during good times, and I should say especially during good times, you should be planning for a rainy day.
Adrian, I'll point this next one to you as well, as it does touch on something in your presentation. You talked about the funding gap that we're likely to see in terms of our balance of payments. And you did speak to the various ways we can look at funding that gap, including the reserves that we hold. The question says, Mexico and Brazil have experienced more depreciation than Jamaica. You mentioned that we've really not seen much year to date, 2%. So Mexico and Brazil, more depreciation despite having much more reserves. Why is this? And could Jamaica face a similar fate?
So I'll say a couple of things. So the absolute level of the reserves is not very interesting. What's really interesting is the adequacy of the reserves. In other words, for example, when you look at the outflows that are expected over a 1-year period relative to the reserves that the country has, if that number or proportion is above 100%, then that country is in a good stead. And if it's clearly below 100%, then you have a problem, right? So what I would advise first is not to look at the absolute level of the reserve, but what we call the adequacy of the reserve. Mexico and Brazil are two important markets in Latin America. Much bigger economies, much more developed currency markets, a lot more dynamism going on inside there. And hence volatility tends to be a lot more than Jamaica. Even during normal times, you'll find a lot more volatility in the Brazilian real and the Mexican peso, certainly relative to the USD. So many other factors happening there. I also want to point out that, and I don't want to discount the response of the local authorities to the COVID impact. The Bank of Jamaica and the Ministry of Finance and the government apparatus in general, notwithstanding limited degrees of freedom, I believe they have responded well. And people should take some confidence from that response. Mm-hmm. And it's one of the reasons why we have seen certainly from a currency perspective and just overall the macroeconomic variables being, I would say, quote unquote, well behaved, is due to the response that we have seen, right? Clearly, I believe as the future unfolds and we get better information in terms of economic fallout, the balance of payment gap, they will have to respond. But I don't want us to discount what they have done so far.
The health outcomes in Mexico and Brazil in the last couple of weeks have also been very challenging.
Yes.
And to Adrian's point, there's a series of responses that are taking place in Jamaica at the economic level. I think we have to be very mindful of the series of responses that are necessary at the social level, and asking ourselves, how do we ensure that the social safety nets that are required and the responses from a healthcare standpoint are available. And I think that's an area in which we performed reasonably well with limited resources. Looking forward, I think there's going to be quite a bit of tension on that because of the GDP downturn that's being projected for us.
Mm-hmm. Adrian, you mentioned something about the importance of liquidity and having this cash for a rainy day. In terms, and even strong businesses, could be at risk of becoming insolvent. When we think about the reinvention stage, there will likely be fallout, right? People who don't emerge, businesses that don't emerge from this, or will need to adapt or reinvent either by way of consolidation. If I were to think of, or we were to think of the industries that are most prone to see, consolidations, partnerships, M&A activity locally, where do you see, in what industries do you see that kind of activity manifesting?
It's a very, very tough question.
A small society.
It's a very small society. Yeah. You're placing a little bit of a spot. But I think my own industry is is a good example of one that I believe is going to be ripe for consolidation. That's just my own view on it. Especially if the economic recovery is fairly prolonged and our customers are credit constrained and people are opting for safety as opposed to risk taking, then I believe the financial sector in general will go through interesting interesting developments as it relates to consolidation. So that would be my response to you.
That's a retail as well.
We're kind of approaching the end of our session, so just take the last two questions here from one of our participants. Given how some of the biggest effects of COVID were partly due to a lack of social safety nets for the most vulnerable, how much is Scotiabank looking to balance the aggressive need for profits? I mean, I guess this could be expanded to all companies, the need for profits with implementing policies that are geared toward building a more economically resilient working class?
Yeah. So what I want to say is, firstly, I'm very proud of the work that we have done so far during COVID. We have made a significant donation to the private sector organization of Jamaica as it relates to obtaining ventilators to ensure that critically ill patients during this time, if the need arises to use a ventilator, it will be there. And so I think we donated about $15 million to that effort. And we are also working with the UHWI on different initiatives to support our population during this difficult period. As indicated before, we have adopted a number of customer assistance initiatives during this period. We have been working with all tiers of our customers, from our small retail customers, small business persons, to our large corporates. And we will continue to do so. We'll continue to be a flexible organization as we work with our customers to get through the end of this. So we'll continue to be that responsible institution that support our customers and support Jamaica.
Thanks, Adrian. Our last question for this session before we wrap up speaks to how we manage and maintain, our investments and savings. So, how in this time when cash is so important, when their lives have been undoubtedly impacted in many ways, how are we encouraging our clients to keep in their investments going, to manage their long-term savings, such as our insurance premiums and pension contributions?
Excellent question, Joy. And this, again, where information is king. And it's very important for people to understand the economic landscape. And one of the things that we have been very proactive about is providing our customers with information, giving them different options, right? And I would say, something that is a key focus priority of our business is to adopt what we call an advisory approach to how customers conduct their business, right? It's not just thinking about today, but also thinking about their longer term future and what they are trying to achieve, and also to ensure that they're being properly advised. So information is key. That is the key. Providing customers with clarity, giving them good context and understanding of the environment, and importantly, providing them with guidance about different asset classes, about the economy in general, so that they can make an informed decision.
Well, on that note, I think what we're doing here right now hits that point very well. I really want to thank everyone for being a part of the session today. This is the first in what we hope will be a series of virtual meetings. I really want to thank our speakers, Jeffery Hall, Dr. Adrian Stokes. Thank you for sharing your insights and perspectives. I'm sure it was very useful. To the extent any of you, our guests and participants, have any feedback for us, please feel free to share as we seek to make these webinars relevant for you. Have a good afternoon and thank you for joining us.
Thank you.
Thank you, Sarah.
Is now more important than ever. With Scotia Online for Business, you can safely and quickly conduct your transactions and save on costs. Accept payments, transfer funds, including third-party and wire transfers, view balances and download statements, pay bills and credit cards, make supplier payments, manage payroll, and purchase foreign exchange. Let us handle the way your business does business. Speak with a Scotia representative today. Call 888-429-5087 or email bnsj.businessbanking@scotiabank.com.